Assalamualaikum and salam sejahtera. This video is prepared to explain about the treatment for subsequent expenditure or subsequent costs. So what is it that we want to talk about or discuss about subsequent expenditure? We want to talk about the initial measurement of subsequent expenditure. But first, let's look at what does it mean by subsequent expenditure or subsequent costs. Subsequent expenditure is an expenditure incurred on an asset after it is brought into use. It means that after you have previously recognized an item as an asset and you have recorded the item as your asset, okay, any additional cost that you incur after that, okay, maybe in the following year or maybe in the same year, for the purpose of maintaining, repairing, replacing, upgrading, or improving the asset. This cost, then we need to record. But the issue is to record as an expense or to record as an asset. Examples of subsequent costs are renewal of road tax and insurance policy for motor vehicle, installing a new multimedia system in your motor vehicle, repainting the building, renovating the building, extending the building. So the cost incurred could be huge, and hence you have an issue whether to expense of in support or whether to capitalize as an asset and hence added to the carrying amount of asset. For subsequent costs, in order for them to be capitalized as PPE or to be added to the carrying amount of PPE, the cost must meet the recognition criteria. What are the recognition criteria? The two recognition criteria: number one, probable that future economic benefit will flow to the entity, and number two, the cost can be measured reliably. So the hardest part is to answer the question whether the subsequent cost that we have incurred could meet the first recognition criteria, which is probable that future economic benefit associated with the asset flow to the entity. For subsequent costs alone, then we have to decide. Based on the original standard, to capitalize the subsequent expenditure, in order for it to meet the first recognition criteria, probable that future economic benefit flow to the entity, we have to look at the enhancement criteria of the subsequent cost. Does it meet the enhancement criteria? What could be the enhancement criteria? So you have to look at whether the subsequent cost could increase the value of PPE, could increase the productivity of PPE, could increase the capacity of PPE, could increase the estimated useful life of PPE, or could increase the revenue of PPE. And it could be also reduce the operating costs. Enhancement also could be in terms of reducing the operating costs. If the subsequent costs incurred have this enhancement criteria, then you may be able to capitalize the cost and add it to the carrying amount of asset. If the replacement, like for example, to replace the car battery. By replacing a car battery, you did not improve the useful life, but you only maintain the working condition of a car. If you did not replace the battery, there is a high possibility that your car cannot move. So you have to replace the battery in order for your car to continue working in the condition that we have intended for the motor vehicle to do. Alright? Okay. Next, let's look at the common examples under subsequent expenditure. The huge cost of subsequent expenditure usually comes from the replacement of parts and also the major inspection. The replacement of parts, as long as it meets the recognition criteria, which is probable that future economic benefit flow to the entity and the cost can be measured reliably. And in the case of subsequent costs, it might be difficult to identify the economic benefit that will flow to the entity, so we are looking at the enhancement criteria, whether the cost that we have incurred could enhance the asset. So enhance can be in terms of productivity, capacity, estimated useful life, revenue, the value, or reducing the operating cost. But for replacement of parts, other than added the new cost to the carrying amount of asset, you have to remember also at the same time you have to de-recognize the old component or the old parts that have been replaced. For major inspection could cost a business millions of money. And for certain industry, major inspection is a must, it is required. If it is not, if the inspection is not performed, then there is a possibility that the business cannot continue to use the equipment. Therefore, if the major inspection is required, then it can be added to the carrying amount of asset if it meets the recognition criteria. But again, at the same time, the cost of the previous inspection is to be de-recognized, regardless of whether the previous inspection was recognized or not. Okay, so now let's look at one example for subsequent expenditure. Okay, in terms of the computation, in terms of the journal entry, okay, and also discussion of accounting treatment. So let's look at one example, replacement of new parts. So a machine costing 700,000 with a useful life of 10 years was acquired on 1st January 2012. 4 years after that. Why 4 years after that? 2012, 2013, 2014, and 2015. And then at the beginning of year 2016, a major component costing 100,000 was replaced with a new component costing 200,000. So let's assume that the replacement of this component will increase the production of the company. What is the carrying amount of machine after replacing the component? The question asks you to discuss or to identify or to calculate the carrying amount of machine after the replacement took place. Okay, so what is an important information here? So first we have cost of machine on 1st January 2012. Estimated useful life, 10 years. A major component, the old component, costing 100,000 on 1st January 2012, was replaced with a new component costing 200,000 on 1st January 2016. Now calculate the carrying amount of machine after the replacement took place. So the first thing that you have to do is to find, okay, so the first thing that we need to do is to find out the carrying amount before the replacement. Okay, number 2, to record the addition of new component. Number 3, to de-recognize the old component. Number 4, to find the carrying amount after the replacement. Okay. Alright, so by going into this step, then we should be able to find the carrying amount of the machine after the replacement took place. So let's look at the computation. Alright, so when we prepare the computation, we have to take into account all the information related to the machine, starting from the initial cost of machine. So the only information that we have related to the cost of machine is 700,000. Okay, so this cost of machine is the cost that they have incurred when they purchase the machine on 1st January 2012. But the transaction that we have to take into account for this question is, all right, the carrying amount as at 1st January 2016, because that is the date when the replacement took place. Meaning that, okay, we have to find the carrying amount, okay, at the end of 31st December 2015, okay, as at 31st December 2015, or, okay, it could be, the amount could be the same as 1st January 2016. Okay, the one that we're looking for here is the carrying amount before the replacement took place. Okay, so take the cost. Okay, so what is the formula to calculate the carrying amount? So carrying amount equal to cost minus accumulated depreciation minus accumulated impairment loss, if any. Alright, so in this case we don't have this one, but we have accumulated depreciation and we have cost. So we have started our computation from the cost, and then we need to calculate the accumulated depreciation for how many years? For 4 years. Why 4 years? Okay, 2012, 13, 14 and 15. Alright, and then on 1st January 2016, this is the carrying amount that we want to find. Okay. Okay. All right. So accumulated depreciation 700,000 divided by 10 times 4. Okay. So equal to 280,000. Therefore, the carrying amount at the end of year 2015 or at the beginning of year 2016, okay, balance, closing balance and opening balance, okay, they should be the same. All right, is 420,000. All right, and then we are going to add the cost of a new component, 200,000. Okay, because we assume just now that by replacing a new component, okay, by replacing components of the machine, okay, the machine could produce more products for the company. Okay, so that is our assumption. So by having this assumption, the replacement of new component meets the enhancement criteria, hence meet the first recognition criteria, which is probable that future economic benefit will flow to the entity. So we add. But then we have to de-recognize the old component. So when we de-recognize the old component, we de-recognize at carrying amount. We have to de-recognize at carrying amount. So how to find the carrying amount? Again, go back to the formula of carrying amount, cost minus accumulated depreciation minus accumulated impairment loss. Alright, but we don't have the accumulated impairment loss. So cost is 100,000 given in the question. Okay, but then minus the accumulated depreciation 40,000. So how do we get this 40,000? So how to calculate this 40,000? Equal to, okay, so accumulated depreciation of all component equal to 100,000 divided by 10. Okay, similar to the estimated useful life of machine, because they comes together, and on the first day it was recognized as an asset, it was recognized as a whole, okay, as one machine, and this machine has an estimated useful life of 10 years. So we are going to use the same basis, which is 10 years. So 100k divided by 10 times 4 years, so equal to 400,000. Okay, so this is the accumulated depreciation for all component. Therefore, the carrying amount is 100,000 minus 40,000 equal to 60,000. Okay, that's it. Okay, therefore, the carrying amount of machine as at 1st January 2016 after the replacement took place is 560,000. 560,000. Okay, all right, that's it. So you have answered the question to calculate the carrying amount, okay, after the replacement took place. What if, okay, what if you are required to, okay, what if you are required to find the Alright, so what if I add another question? What is the carrying amount as at 31st December 2016? Okay. If I add another question, what is carrying amount as at 31st December 2016? If you have this question, then you cannot stop your computation only up to 1st January 2016, but you have to continue your working, okay, by including the depreciation, because machine is a depreciable asset. At the end of the year, it is common that we are going to make some adjustment. Okay, one of the adjustment that we have to make is to provide for depreciation. So for this machine, okay, on 1st January 2016, we have adjust the carrying amount to include the new component and to de-recognize the old component. Therefore, the new carrying amount on 1st January 2016 after the replacement took place is 560,000. And then we are going to minus the new depreciation expense. Okay, so for 6 years after that, okay, assuming that there is no more replacement of parts, then for 6 years we are going to deduct, okay, new depreciation expense, which is equal to, okay, so how to calculate this one? You take the new carrying amount after the replacement took place, 560,000, okay, and divide by 6 years. What is 6 years? This is the remaining useful life. So this is the remaining useful life. Okay, 10 minus 4 equal to 6. Okay, therefore, the new depreciation expense, okay, is 93333. Okay, hence we need to calculate the carrying amount as at 31st December 2016. Okay, 560,000 minus 93333. So here you should get 4666667. 4666667. So now you have answered the question, what is the carrying amount as at 31st December 2016? The carrying amount is 466,667. Okay. Alright. So now let's look at the journal entry. Okay. Assume that you have a question here. Journalize the transaction for year ended 31st December 2016. Journalize the transaction for year ended 31st December 2016. Okay, so to help you to prepare the journal entry, to make sure that you did not leave anything out from the journal entry, so you have to look again at the computation here, okay, at the working here. Alright, so we are going to make sure that we include all the transactions that have happened in year 2016 starting from 1st January 2016. So we are going to look here and then to take into consideration, okay, all the transactions that happened between 1st January 2016 to 31st December 2016. Okay, so what are the transaction that has happened here? Okay, what are the transactions that have happened here? Number one, addition of the new component, de-recognition of old component, and then to provide for new depreciation expense. Okay, 1, 2, and 3. So we have to record, we have to journalize these 3 transactions in our journal entry. Okay. Alright. So this is the journal entry. Okay, so we are going to start with the first transaction, which is the recognition of the new component that happened on 1st January 2016. Okay, so when we say that we add to the carrying amount, it means that we are going to add to the same account, the same asset account. So we are replacing components of a machine. So we are going to add that amount into the cost of machine. So debit machine Okay, debit machine, not new component but machine. So debit machine 200,000, credit cash 200,000. Number 2 happened on the same date, 1st January 2016, derecognition of old component. Okay, for derecognition of any asset, we have to remove both, okay, both cost and accumulated depreciation. We have to remove both cost and accumulated depreciation related to asset derecognized. Okay, so here we want to derecognize an old component from the machine. So credit machine, okay, not the old component, credit machine, the same account. Okay, 100,000 cost, debit its accumulated depreciation account, 40,000 as per calculated before. And then if there is any difference between debit and credit, any difference, that amount, okay, that amount would be either loss on disposal or gain on disposal. So in this case, it is loss on disposal. It is loss on disposal. Why loss on disposal? Because we still have a balance of the carrying amount, okay, of old component, but the old component is already being derecognized. Okay, so suffer loss on disposal, all right, because the debit, okay, is less than credit. Okay, and then at the end of the year, you provide for depreciation expense. Okay, so when you provide for depreciation expense, okay, so as usual, to recognize or to record an expense account, so we debit depreciation expense or debit SOPL depreciation 93333, and then to credit accumulated depreciation of machine 93333. Alright, so that's it for the discussion of subsequent expenditure, okay, on the computation part and also to journalize, okay, the transaction. Alright, okay.